Hey everyone, it's Mark Ferguson with Invest for More, and I'm back with another real estate investing video. Today I'm talking about the best property to buy as a beginning investor in today's market. And if you're wondering when today is, it's 2023. You may be watching this now or at the future at some point. I bought my first rental properties in 2010. Obviously things were much different back then, and a lot of people ask me, sure, you got great deals back then, but you can't do the same thing now. How do you invest in real estate now with prices higher, with interest rates higher, and what type of property is the best property to buy? And that's what I'm going to talk about today, is the best type of property to buy if you're beginning. Now, we'll have another video that talks about how to invest in real estate, how to get the money, all of that as well. But right now, what you're looking at is my first rental property from 2010 when I first bought it. And I'm going to talk about single-family homes, multifamily homes, commercial properties, house hacking, all types of different ways to buy your first property, and the pros and cons of each. Now, love the likes, love the comments, love the shares. Keep those coming. We have lots of different videos on my channel about my real estate properties, my rental properties, my flips, my businesses, and advice videos like this too, and the crazy stuff that happens to us with squatters, evictions, break-ins, police, all kinds of interesting things going on. All right. Now, I am still buying properties now. I bought 16 single-family homes from 2010 to 2015. I was a real estate agent. I had flipped houses before that, but that's when I bought my first rental, was 2010. I loved single-family homes back then. Yes, it was after the crash. Prices were cheaper. I bought this property for $97,000 in Greeley, Colorado. It was a 3-bedroom, 2-bath home with a 2-car garage, no basement, and I ended up selling it for $275,000 in 2019. It's probably worth $350,000 now, but I used a 1031 exchange to buy a commercial property with the funds from this property. So single-family homes can be amazing first investments for somebody who wants to get into real estate. There's so many advantages to them. One, there's a lot of them, right? Most places have more single-family homes and commercial properties and multifamily properties, and that's a big advantage because, one, you can often get a really good deal because there's more of them. There might be more distressed sales, more estate sales, which is what this was, more foreclosures on single-family homes, which means you can get a really good deal. And I'm a huge fan of always getting a good deal no matter what rental property I buy. So not only can you get a great deal on single-family homes, but they're usually easy to rent. Lots of renters are looking for homes. I know there's this huge narrative right now about investors buying all the houses, record numbers of houses being bought, and what they don't tell you is that there's more houses being sold by investors than bought by investors. CoreLogic showed there are 50% more sales of rental properties than purchases since COVID in the last 3 years. And some people will tell me, that's impossible. You can't have more sales than purchases. Well, what happens is if you take a rental property and you sell it to an owner-occupant, it's no longer a rental property. So you can sell more rentals than those that are being bought. And so there's actually a shortage of rentals right now in the country. That's why rents have been going up. There are not too many single-family rental properties at all. So if you were looking at single-family homes, I would not worry about having to rent them. There's a huge demand to rent houses right now in most areas of the country. Now, they're easier to rent because a lot of renters want a house. They don't want an apartment. They have pets. They have kids. And there's that demand for it, and there's simply not a whole lot of single-family home rentals. The other huge advantage, not only are there a lot of people who are renting them, but of course you should always screen your tenants, do a really good job picking your tenants, but a lot of tenants in houses will take very good care of them and stay for a very long time. I've had tenants in some of my houses for more than 10 years now. It's crazy. And you have to do very little work on the house during that time. They take care of it. A lot of times tenants will fix things on their own, which is sometimes good, sometimes bad. You don't want them fixing major things and doing it wrong, but they will take care of minor maintenance things, repairs. And speaking of maintenance, when you have a single-family home, usually the tenant is mowing the lawn, they're shoveling the snow, they're paying all the utilities, they're cutting the grass. I think I just said that, but they're maintaining the outside of it too, which you don't have to do, so there's less work for you. Single-family homes can be great because of that, and they're easier to finance. Single-family homes are one of the easiest investments to finance. Banks will finance them, big banks will finance them, even a lot of these national rental property lenders that are popping up that did not exist when I bought my properties, love to finance single-family homes. Now, yes, I was very fortunate to buy houses back then. I wish I would have bought more. But at the same time, people were telling me I was an idiot. I should not be buying properties. Another crash was coming, and it wasn't easy to finance them. So there were pros and cons. Of course, going back in time, I would buy many, many more if I could. But we can't go back in time. We have to deal with what there is today. So those are some of the pros of a single family home. But obviously, there's some big cons right now as well. And one of those is price point, right? A lot of areas have very expensive houses. And as houses go up in value, the rents don't always go up at the same ratio, right? You know, if a $100,000 house might rent for $1,000, $1,100, I rented this for $1,050 right after I bought it. Well, you get to a $200,000 house, and your rent's probably not going to be $2,000. It's probably going to be maybe $1,500, maybe $1,400. You get up to a $400,000 house, your rent's not going to be $4,000. It's probably going to be $2,000, maybe $2,100, and that gap in ratio keeps getting bigger the more expensive house you get. So not only is it harder to buy single family homes because prices are higher and you need more money down, you have more closing costs, the rents aren't as high compared to that purchase price. That's why I stopped buying rentals in 2015 in Colorado and switched to commercial. So there are still many markets in the country that have affordable single family homes in the South and Alabama, parts of Florida, Louisiana, Georgia, I mean, the Midwest, Milwaukee. There's parts of Colorado that have them. There's parts of California. Yes, Redding has cheaper houses. Buffalo, New York. There's all kinds of places across the country that have cheap single-family homes, but there's also all kinds of places that have really expensive homes. So if you're in a very expensive place, you're just starting out, houses might be tricky to get into. You have the option of going out of state, which I have videos and articles on my blog, investormore.com. That can be tricky and risky. You can do it, but maybe you look at a different type of investment property that could be cheaper and possibly give you better returns if you're in an area with really expensive homes. All right, another option you have besides single-family homes is a duplex or triplex or fourplex. I loop all these in together because they're 2 to 4 units, and those are treated the same financing wise, and I'll talk about that. This is not a property I owned. This is actually a video I did. Let's see if house hack case study. It was a house for sale at the time in Greeley, and I did the numbers on what it would cost to move in, live in one unit, and rent out another unit. And this is something you can do with a single-family home too. So when you're putting money down on properties, you're buying straight investment properties, you're probably putting 20% or 25% down. I put 25% down on my first rental property, got the money from refinancing my personal house, and I used Bank of America. I would not use Bank of America. I would not put 25% down. I put 20% down and use a different lender. It took a long time. It was very difficult using Bank of America, but I got it done. Now, you can also live in that single-family home and put 3.5% down, maybe less with VA or USDA, 3% conventional, 5% conventional. There's so many different options, but you have to live in that house a year, then you can rent it out. You might be able to have roommates in that single-family home, depending on your zoning. Or if you buy a duplex like this, or a threeplex, or a fourplex, you can live in one unit and rent out another unit while you live there for that year. After a year, you can keep renting it or move out, rent the whole thing. Totally legal on almost all loans. You can look at the loan guidelines. They'll all be in writing. A lot of people say you can't do that. I've never seen someone point out their writing in an FHA loan or other loan documents that says you can't sell it after 1 year or rent it out after 1 year and move out. Don't have to refinance it. Don't have to tell the bank. It's all clear in the documents about what you can and can't do. Now, the cool thing about that is when you have a duplex, a triplex, or fourplex and you're collecting rent, that will help you qualify if you want to buy another property after that year, because you've already got rent coming in. You show the property's performing. That can make it a little better than a single-family home, but you can still do it with a single-family home too. Now, the cool part about 2 to 4 unit properties is a lot of times they'll have better rent numbers than single-family homes too. Depends on your market. Sometimes they're not better, but a lot of times they are, because a single-family home is often sold to owner-occupants. That's the number one buyer. That's who wants to buy the house its best use. And owner-occupied buyers don't care what it rents for. They care what a house sells for compared to other properties for sale. So the rent numbers can go up or down. It's not really consistent on single-family homes. A duplex, a triplex, a fourplex usually are valued based on the rent and income coming in. So if you have that $400,000 single-family home that rents for $1,800 a month, if you have a $400,000 duplex, it might rent for $2,600 a month or $3,000 a month. It might have much better ratios than the single family home, and that can be a huge advantage. Now, you can still finance it very similarly to a single family home. That's great. You might get long-term tenants, but you're probably gonna have a little more turnover. The more units you have, you'll find, most people eventually want to buy a house or rent a house. That's what they want. They don't want an apartment. They don't want people sharing a house with them. So this might be more something where people are moving out, in and out more. There might be a little more maintenance and damage because there's more turnover. There might be more vacant months. So that's a downside of this. But like I said, there's other upsides with the rents that come in. And then the other advantage of this is if you stay under 4 units, that's the number you have to stay under to get the owner-occupied loan. If you go to 5 units, you can't live in there, get that owner-occupied loan anymore. You have multiple buyers still if you want to sell the property. And so I meant to say this on single-family homes too, a big advantage. If you get into trouble, you need to sell a house. If you have a single-family home, they're fairly easy to sell. You can sell to an investor or you can sell to an owner-occupant. 2 to 4 family, kind of the same way. You can sell to an investor or an owner-occupant. Now, there's going to be fewer owner-occupants looking to house hack. They will still be out there, and it'll still be easier to sell this property than a bigger multifamily property or a commercial property. So that's another big advantage with a duplex, triplex, fourplex as well. Now, with these types of properties, the owner's probably mowing the grass. He's probably doing snow removal. He's maintaining the property. A little more work there. There might be shared utilities, or the landlord might pay water for everyone. There might be more utilities paid by the landlord as well too. So you have to make sure you look at those expenses and figure out the differences there as well. Still, real similar to a single family home, a little more expenses, maybe not quite as long-term tenants, a little more maintenance, but similar financing, similar ability to sell them. Now, what if we get into larger multifamily and commercial properties? All right, now on to multifamily. This is an 8-plex I bought a little over a year ago. And a lot of people will tell beginners they should only start with 32 units or more. That is really, really hard. And this is just an 8-plex. And this property has been really, really hard. We call it the Ocho, and it's had a lot of issues. And I'm a very experienced investor who's done this for many, many years. So you can do large multifamily. I don't want to discourage people from doing large multifamily, but it's very hard to do it from the very beginning. And I'll tell you why. And this is starting with a relatively small multifamily. And that is, one, it takes a lot of money, right? We paid $1.35 million for this. If you want 20% down, that's $260-some thousand you need, plus closing costs, inspections, appraisals, all of that. It gets very expensive. So you need a lot of money. And the other issue too is banks are very hesitant to loan to new investors on big deals like this too. So even if you have the money, you may not even be able to get the loan. Maybe, maybe not, but it could be much more difficult. Sellers are even hesitant to let new investors show the properties or sell it to them because there's such a huge fallout rate, and they're hesitant about the ability of that investor to close the deal and do the deal. So there's a lot working against you. Now, you can do these deals, but a lot of times it takes a whole lot of money, a whole lot of cash, and someone holding your hand with experience or that can put their name on it and help you throughout the way. Even then, it still might take you years and years to get to a point where you can buy bigger apartment buildings. And during that time, you could have bought smaller properties, even smaller commercial, smaller residential, 2 to 4 units, built your way up. If you're getting good deals, you're building equity, you're building cash flow, you'll actually be in a better position and probably be able to buy this bigger unit building sooner if you buy smaller first than if you just wait and try and buy the bigger one. So there's a lot of different things that go into these bigger ones. Besides the ability to buy it, management can be trickier. The more units you have, usually the more tenant turnover you have, usually kind of the lower the rents are compared to the area. Your maintenance can be higher. There's a lot of different things that go on with it. We've had squatters on this one. We've had multiple evictions on this property. And this I thought was going to be one of the nicer properties I've bought in a while. And what happened is it turned out the previous landlord kind of got any tenant in there he could before he sold it to make the numbers look good, without screening them very well, and then we had to kind of clean up that mess after we bought it. There can be all kinds of situations like that when you buy multifamily properties. So that's something to consider. Now, a lot of people say the pros of buying big multifamily properties like this is you have, one roof, although this has 3 roofs. It has the 8-plex. It's got 16 garages with it too. So one bay of garages and another bay of garages. And it says, yeah, you have economy of scale. You've got one roof. You've got one heating system, you've got 1 yard to maintain, and that's true. But some of the downsides of that too is if that roof goes bad, you might be spending $50,000 to replace that roof. Whereas if you have a house or a duplex, you might be spending $10,000 or $15,000 to replace the roof on those properties. And if you have 10 houses, you probably don't have to replace all 10 roofs at once, unless it's like a massive hailstorm that comes through. And if that's the case, your insurance should pay for it. But you might, replace a roof this year, maybe in 3 years from now. You kind of alter when you're paying those expenses. With this property, if that roof needs done, you have to do it all at once. That's a huge expense you have to be ready for. So yes, the expenses can be lower overall based on the cash flow and rents, but when those big expenses come, they come big. There's a lot of money you need, so that's something to consider on these properties. So you've got the tenants, lots of turnover, lots of management. You're definitely maintaining the property. You're doing the grass, the snow removal. There might be some shared utilities. You might be paying more utilities like you would on a smaller multifamily property. The garages are cool in theory, but they can take some time and effort to rent and have their own issues as well, which we're seeing too with someone not paying rent. And so there's a lot that goes into these multifamily properties. Now, if you get bigger and bigger and bigger, the one advantage is you might be able to have an on-site manager, someone who handles all those issues, rents the properties for you, and has someone there to take care of the property. If you get big enough, that is an advantage. Again, getting properties that big is very difficult and takes a whole lot of time, so it's not something that just happens overnight. And a lot of these people you see who are doing syndications and buying big apartment complexes, it's not like me where I buy almost all my stuff within 20 miles of my house or office, right? I can't just go in my backyard and find a 40-unit apartment complex. It's a good deal that cash flows. There might be one for sale, but it's probably going to be really expensive and not make sense. Those are the guys that are going across the country all the time, traveling like crazy, trying to find these deals. It can take them years to find deals, and they've got this massive experience behind them. So yes, you can do this. I don't want to discourage people from buying big multifamily, much bigger than this even, but it's not always as easy as they make it look or seem on Facebook, on YouTube, in these coaching groups, all of that. So you've got to be careful with the multifamily. And a lot of times I still think it's better to start small, work your way up. And yes, it is Grant Cardone who says you should always buy a 32 unit or bigger first. He used to say do an FHA 203K loan, buy a 2 to 4 unit house hack, and go that route. But he changed when he started Cardone Capital. So even he used to say to start small, but that changed along the way. And yeah, don't be afraid to start small. You can build equity and get into these sooner. All right, next up is small commercial. This is a commercial property I paid, I think, $130,000 for in 2019, in that range. Small property, and this is something that a lot of people don't consider. When they think of commercial properties, they think of a Lowe's or a Home Depot or a giant, one tenant building where if that tenant leaves, you're just totally screwed. And that's not all commercial has to offer. There's lots of these smaller deals that can actually cash flow and be cheaper than single family homes or even small duplexes, multifamily. And a lot of people ignore these, which means there can be more opportunity for these as well. I bought, 16 single family rentals from 2010 to 2015. They got real expensive, although now they don't seem expensive at all back then. I started buying commercial properties. And I bought commercial properties because I could buy ones like this for $130,000 that would rent for $1,600 is what I did. Whereas if I had to buy a single family home or a duplex that rented for that much, I'd have to pay $300,000 for it, $250,000 at least. Now it needed some work. As you can see, it wasn't in perfect shape, but it was still a really good deal. But there's pros and cons to commercial you have to think about as well. So pros, sometimes you can get them cheaper. Sometimes they need work, as you can see. They cash flow better. Sometimes there's less competition to get them, which means even though there's not as many commercial deals as, say, houses, sometimes you can still get really good deals because there's not as many people looking for them. And if you find tenants, they can stay in the property for years and years and years. They can be very stable when you find those tenants. Now, the cons to small commercial like this, it depends on where you're at. Taxes can be way higher. In Colorado, taxes on commercial are way higher than residential. In other areas, that's not always the case. Sometimes they're actually lower on commercial. Just depends. So make sure you look at the expenses. Insurance can be higher on commercial. That's something you have to look at too, depending on the type of business, the type of building it is. Financing can be more difficult on commercial too. That's something to really consider. Big banks won't do it. A lot of small banks won't do it, but there are banks that will finance commercial. It just takes more time, and you might have to have that experience behind your belt. A lot of banks are hesitant to loan to individuals on commercial properties without any experience. Again, why it's smart to sometimes start small, single family, small duplex to get some experience under your belt and show lenders, hey, I know what I'm doing. I've done this before. So those are some of the cons. And then, of course, one of the biggest cons, and yes, I know I did mention this before, is it can take a long time to rent these properties. They can sit vacant for a while. Finding that perfect tenant takes time. You still need to screen them, make sure they're going to pay their rent. So while the tenants often stay longer, it can take longer to find them. And so you've got to be prepared for that time where you might have a vacant property, a lot of expenses coming in before it's actually rented. And then something else we talked about on the other videos, and I forgot to mention this on multifamily, but it kind of stands true for multifamily too, maybe a little more extreme on commercial. If you ever need to sell this property, get out of the property. If you're selling commercial, those can be tricky because there's fewer buyers looking for a commercial. It might let you get a better deal, but also might be harder to sell. Now, with multifamily, over 4 units, 5 to 5,000 units, you're only selling to investors too. We mentioned 2 to 4 unit, you can sell to an investor or an owner-occupant. On multifamily, over 5 units, you're pretty much just selling to an investor. They only care about cash flow. Interest rates can greatly affect that. They can be harder to sell. Now with commercial, you might actually sell to an owner-occupant too. And how that works is if somebody has a business, this was a pawn shop when I bought it. Let's say another pawn shop wants to buy this property. Well, they can get SBA loans, 10% down, actually better loans than big multifamily if they're going to live in the, not live in the property, have their own business in the property. And usually you have to have at least 51% of the property occupied by your business to qualify for those loans. But that can expand who you're selling to a little bit more with these smaller commercial properties. Now, if you have a huge, giant 100,000 square foot warehouse, obviously you're going to be very limited to owner occupants looking for that. There will be some, but these smaller ones, you have a lot more people who are looking to start their own business, an insurance agency, a plumber, who knows what it is that might want a small building like this. You'll have a lot more people looking to buy them. So small commercial can be a good way to get into real estate too, but it will be tricky and you really, really have to know commercial. The leases are different. Finding tenants is different. Expenses are different. Financing them is different. All of that. Now I do have a book, Build a Commercial Rental Property Empire, that goes over all that. It's on Amazon, paperback, hardcover, audio version, Kindle version, all those are on there for commercial. Also, I have Build a Rental Property Empire for residential too, that goes into buying houses, multifamily on that front. So those can really help you actually do these things, not just conceptualize them and want to do them. Those go into all the details on that. All right, now let's look at big commercial. All right, this is a big commercial one I bought less than a year ago for $865,000. Now, this one is very, very risky, even for experienced investors, has a lot of drawbacks, but some amazing positives too. And I would highly recommend new investors not jump into something like this. Like I said, except in like a multifamily situation where you have tons of money and someone holding your hand with a lot of experience to help you in a situation like this. This property I paid $865,000 for, I think I just said that, 13,000 square feet, totally vacant when I bought it. I rented it to a diesel mechanic shop right here. We rented this over here to a church. We rented the front part to an auto detailer. And eventually we had the whole place rented for $10,750, which makes the property worth almost double what I paid for it. But that sounds amazing and awesome. There's drawbacks too. One, we talked about it before with small commercial. It can take a long time to get these rented. I was lucky I got the diesel mechanic shop rented right away. Took a little longer, a few months to get the church rented. We have another garage space that's rented in the back too. And then usually you have tenants who stay for long term. The detail place already left. They stopped paying rent. So that was frustrating, but it should be easy to rent again, that little unit. However, that's something to think about too. You can have bad tenants in commercial. Most of them are usually a little better, but it's not always 100%. Now, the other drawbacks with this property, obviously, very hard to finance this property. And not just because the down payment would be big, the closing costs would be big, but with commercial appraisals, you're probably paying $5,000 to $10,000 for an appraisal on this property. If you want an inspection, you're probably paying $5,000 for an inspection on this property. I use private money, so I avoided those issues. But if I ever wanted to sell or refinance it, I'd have to pay for that appraisal. And the other thing you come across with big commercial properties like this is most lenders will want an environmental report done. Phase 1, phase 2, where a specialist comes in, looks at the history of the property, says, hey, were there ever gas stations here? Was there ever a mechanic, a diesel mechanic? Was there any environmental concerns of this property? If they find any red flags at all, they'll order a more in-depth report, look through it. This can cost you tens of thousands of dollars. I had to do it on another property where we had to drill holes in the ground to test things. And this property has, with mechanics and different things, a lot of red flags on it. That could be a big hang up when I ever go to sell it or refinance it with that environmental report. So that's a big red flag to look for on commercial properties. I bought a really big commercial property 2018, kind of when I was first getting started in commercial. And even though I was a broker, I've been doing this for years and years and years. I did residential real estate for years and years and years. I had a commercial broker help me out. I paid him a commission. I didn't take a commission so I could learn about commercial, the ins and outs, about environmental reports, tenant finishes, because a lot of tenants will want you to fix up properties for them, not just the paint and flooring, but they might want you to install different rooms and different things. There can be a lot that goes into it, but that actually makes sense in the numbers wise because you're adding value, adding rent to the properties. So a lot that goes into commercial. You can have huge value add opportunities by adding tenants. You can increase the value significantly like we did in this one, but they're much harder to finance. You can have a lot of holding costs and carrying costs if they're vacant for a long time. Fewer buyers in this type of property. Obviously, the bigger you get, kind of the fewer buyers. Still could have an owner-occupant situation here. In fact, I've kind of thought about asking the diesel mechanic if he wants to buy it from me. We'll see what I decide there. And then, yeah, obviously, if you ever want to sell it, it can take a long time. It's not something to easily get out of. And on these big ones too, the city codes, the repairs can be way more expensive too. On certain types of businesses in certain areas, you know, the city might say you have to have a fire sprinkler system in that building. And that can cost you $100,000 in certain buildings to install sprinklers in the ceiling for fire. You know, there can be other code violations. Codes are different for commercial. If you're doing major rehabs, major remodels, you might need a commercial contractor. They're always way more expensive. So those are some things to consider with commercial as well. And technically, you know, if you have new businesses moving in, if you're renting properties, the city or county might want you to get every single property approved for that particular business. They might have requirements. They might make you do repairs. They might make you add more water. All kinds of things that can happen when you're dealing with commercial properties as opposed to residential. Now, those can also happen with big multifamily in some cases, but it can be stricter on commercial and what they require. And there also is a lot of different zoning for commercial, industrial, different types of commercial, different types of industrial, mixed use that you have to consider and think about as well when looking at commercial property. So there's a lot going on. Again, highly suggest getting some other deals under your feet, maybe doing smaller commercial to learn, get some experience, take less risk before you jump into these big ones, unless you have tons of money or someone to really hold your hand and help you do these types of deals. And I always say too, if there's someone who's, you know, has these amazing deals and wants to hold your hand, you know, they could just buy it themselves too. So it's tricky finding those people to help you do everything for you. All right, the last type of property I'm going to talk about is mixed use. And this is something that new investors might consider too. Mixed use means a mix of residential and commercial. So that house is included in this property that I bought. There's an apartment up here, an apartment on the side, and this was commercial. It was a church. So that's mixed use, residential and commercial together on the same property. So there can be advantages with mixed use. You have residential rent coming in and possible commercial rent. Sometimes one's easier to rent than the other, so it's a little bit diversification, which is nice. So that's one advantage. If you have small, you know, under 4 units, you also might be able to do some kind of owner-occupant purchase. If you live in 1 unit, can be a little trickier if you have a commercial factor, but you can still do it. If you have a business, you might be able to do an SBA loan, occupy part of the building with your business and rent the other parts to bring in more income while you start a business. I sold a property that was mixed use to an insurance agent who did that recently. So there can be some pros there. The income can be higher than other properties because it's a little different. A lot of people don't like mixed use or shy away from it because they don't understand it. Again, that can create more opportunity. The cons, same as some of the other ones we've talked about. If you're above the 4-unit mark, it can be harder to finance. A lot of banks shy away from mixed use, even more than commercial or more than multifamily, so that can be trickier. Some are just fine with it, it doesn't matter, but some can make it a little harder to finance these properties. And then selling them kind of depends. Sometimes they can be easier to sell than straight commercial or even straight multifamily because you can appeal to investors who buy everything. Owner-occupant residences, if it's under 4 units, they might be able to live in one and rent the rest. Or owner-occupied commercial, where they might be able to work there and rent the rest. So if you have an appealing property in a good location, this rented that's got income in, it can actually be a little simpler to sell than some of the other stuff, just depending on what it is and a lot of different factors. So this one, I wanted to convert to all multifamily, and I've had a story on this on my channel in a lot of different areas. And I'll try to link to all of these videos and different stories too. Or if you want to hear about different properties, please comment below. I have lots of different videos, over 1,000 on different properties and different stuff we've done over the years. But I wanted to convert this all to multifamily. The city wanted me to go through a site plan review. They wanted me to add 2 shares of water, which costs like $160,000 in Colorado. They wanted me to put in a fire sprinkler system, which I talked about before. They wanted me to pave their alleys for them, pave parking, do all kinds of crazy stuff to convert this. So I ended up not converting it. I actually have it for sale now, and it's might be getting an offer soon. We'll see. But again, appealing to somebody who might want to live there and rent the rest of it. So just kind of a parting note, if you want to make big changes to commercial multifamily, you want to change the use, you want to go from one use to another, that can get very complicated too, and the city can really make your life complicated as well. Even if they tell you it will be easy and a simple process, it's not always the case. So there you go. There's some ideas for what to buy as a beginner, kind of going back over all of it. If I were to give advice to, most people, I would say, hey, look at single family. If that's too expensive, look at small multifamily. If that's too expensive, you can look at small commercial, but be very careful with it. And if all of those are too expensive, then you need to start looking in different markets, different areas of the country, and invest in a cheaper area maybe, or figure out how you can make more money, save more money. That's another route as well. Waiting around for a housing crash, I do not think is going to work for you. Housing prices may drop some, but I don't see a crash coming ever again where we get prices as low as they were 10 years ago. That was just kind of an albatross, crazy situation with horrible lending guidelines I don't think we'll ever see. And waiting around for that to happen, I just don't think is a good strategy. You need to take action. You need to do something to make it work for you, assuming prices will stay where they're at. All right. Thanks for all the comments. Love those. Let me know if you have any questions. Love seeing the likes as well. That helps out my channel. Love seeing new subscribers too. Happy to do more videos like this that go into more details. I'd love to talk about how to get the money to buy in an expensive market as well here coming up soon. And I have a whole lot of other videos I want to create for helping people get started in real estate investing in this market when prices are high, interest rates are high, and it's a little tricky right now. All right, take care. Be back soon.